Hello, everybody, and welcome to the Crypto Hipsters Chronicles. This is your host, Jamil Hassan, the Crypto Hipster, where from the period of time of March 2021 through June 2022, I interviewed 182 founders, executives, entrepreneurs, artists, and authors from over 50 different countries and built a global audience in 165 countries while posting and producing my podcast at the Irish Tech News platform. Since then, I realized there's a lot of incredible content in the interviews that I had, and my interviews with Thought Leadership podcast interviews that had amazing gems from all the guests that I was able to interview. And so I've chosen and decided to create the Crypto Hipsters Chronicles series, which is a series of the gems, the little tiny pieces from each of the interviews that I had in the areas of Bitcoin, Ethereum, metaverses, NFTs, regulatory issues in crypto globally, art, and you name it across the wide spectrum of different verticals in blockchain and crypto industry, and in fintech and mobility and sustainability as well. These are about 15 minutes long, each chronicle, and has three, four, or five different segments from different interviews. So I hope you enjoy them. I hope you have learned a lot. And if you'd like to listen to the full podcasts, they are available online at both the Irish Tech News and on Anchor. And in a future date will be available on the Crypto Hipsters station as well. So please enjoy and talk to you soon. Welcome to Crypto Hipsters Chronicles, episode 42, creating a path forward in decentralized finance for global banks and institutions. This podcast is a compilation of 4 interviews. First, Jamie Finn, who is the co-founder and president of Securitize. Second, Matthias de Vries, who is the founder and CTO at Alliance Block. Third, Joshua Tobkin, who is the co-founder of Supra Oracles. And fourth, Christopher McGregor, who is the CEO at Vesto. Enjoy. I'd say that I cover the globe, right? So I've had, founders on from many European countries so far and from Taiwan, Hong Kong, China. I haven't had any founders on from Japan yet. So I'm trying to get a lay of the land there. And I know you guys are huge. So I wanted to get a lay of the land in Japan. How you see it?
Sure. No problem. Yeah, we're big in Japan. So Japan's a really interesting market. It's a market where large companies work together to change regulations and make it so that they can affect things in ways that they all agree are relevant. It's a unique kind of consensus approach that they take. We entered Japan through an acquisition of a company called Biddle in late 2018, December 26th. They don't celebrate Christmas in Japan, just FYI. I didn't know that. So we closed December 26th. And when we acquired them, sorry, it's actually 2019, not 2018. So when we acquired them, it was a few folks, and we were working on a variety of consulting projects. We then started working with some large financial institutions there and the regulator, working with the Japan Security Token Association and another organization there in order to kind of educate and teach people about what was going on. Now, flash forward to 2021, we just completed our third issuance there, the first credit-rated security token ever, working with a bank that you probably haven't heard of, but is the largest bank in Japan, called Sumitomo Mitsui Trust Bank. And now think about the words I just said. A bank issued a credit-rated token. Just think about that. So, Japan is a forward-thinking market. They understand formats. They understand the opportunities that this creates, and there's a need there to access investment vehicles that are in alternative formats because they just don't have, all the right tools in the traditional world. So, that's what's going on there. There's a ton of institutional adoption. We have a number of very large Japanese investors that are working with us on deals. We've worked with Mitsui Fudosan, which is a very large real estate developer, there on an issuance. And there's a number of marketplaces coming online. We have SBI as an investor. They have a marketplace that's coming online to trade securities in Japan. They're called PTS instead of ATS, just for what it's worth. So, we have a team of about 10 people there who have done an amazing job to kind of educate and grow the space. Our country manager, Kobayashi-san, has been fantastic and instrumental, coming from American Express. And, really, we have an extremely local team. Like, it's extremely Japanese. And also, one of our secret weapons is Carlos Domingo, my co-founder, speaks Japanese fluently and spent 10 years there. So that also helps.
European countries right now, one of the areas that veterinary diagnostics touches is precision medicine. What lessons could you take from examining, breakthroughs in precision medicine that could, lessons that you could take in Alliance Block moving forward and applying that to creating a global decentralized society?
Actually, this is super interesting that you brought this up specifically. And looking back at my work creating software and algorithms in the veterinary diagnostics field, there are a few quite huge takeaways and problems that are still very relevant today. And this still partially drive me to what I'm doing to this day. So take the field of veterinary diagnostics, or any diagnostics in general. It first needs to be funded largely in order to go through many years of R&D with risks of leading nowhere. And then when the R&D leads to something, a product needs to be developed from the research that doesn't only produce consistent and predictable output, but can also be easily reproduced. And then facing fierce competition or pressure from current events, like COVID-19, but back then, things like mad cow disease and foot-and-mouth disease, things that I was working on, you have to work on continuously improving your product, make it produce less waste, be more accurate, have a quicker time to produce the results. The same dynamic is valid for the tech industry, basically, especially for tech startups working on cutting-edge technology innovations, for example, in the blockchain industry. And for the blockchain industry specifically, in bull markets, we see many projects easily raising funds without almost any accountability. In a bear market, serious projects that are open to be held accountable completely have almost no way to raise funds, have a much higher probability to fail, even though they have a much better team, much better fundamentals than projects that have raised large sums of money in better times. And unfortunately, it's that widespread lack of accountability that is contributing to the start of bear markets in the first place. And that's why we believe milestone-based financing as one of the pillars going forward, for example, in the Alliance Block funded product, will be an important part of the Alliance Block ecosystem. And another very important thing is data, actually. So when I was leading the development of the veterinary diagnostic software, data was essential to determine the success of the diagnostic product and the software itself. Having the right data was crucial for the European Union approvals, feeding data warehouses to keep archives of each run, and of course, for the detection of a positive result during the run itself. But yeah, all data can be eventually tampered with. So a centralized anti-tampering mechanism was added to combat this back then. Today, data plays an even larger role in our lives. It's not only everywhere around us, produced by the news, social media, and even by our friends to get us to form opinions about current events. And take definitely COVID-19 in this example. There have been many cases of false data going around to social media that try to push people in an either pro or against stance with regards to the virus. And this is exactly why the Alliance Block data tunnel that was of which the MVP version was released this morning is so extremely important, because our data tunnel allows to hold the verifiable, truthful source of the data, track all access to this data, provide the consumer of this data to see the potential evolution of the data.
What is the danger? Like, what are the concerns? Is transparency? What is the danger of having a lack of transparency? And then how does that danger apply to, like, widespread use of privacy coins like Monero and recently with Mimblewimble, Litecoin, and all that?
So a lack of transparency, just in, maybe I can just talk about the traditional markets, and I can talk about, what the difference is. So, in traditional markets, when you have this lack of transparency, when you have, ratings agencies giving AAA ratings to, garbage, that was kind of ultimately led to the 2008 crisis, or housing crisis, mortgage crisis. That kind of systemic risk as a result of this lack of transparency, right? Then you have, you have actually today the current commodity markets, right? The real commodity markets, when we're talking about physical, delivery of like oil and such. There's a lot of lack of transparency there. I'm not sure how to fix that exactly. This is a very convoluted ecosystem. We have entities who are kind of mercenary, who are, even though the U.S. might have sanctions against Russian oil, for example, they are figuring out ways to get Russian oil to other countries, even though they're Americans, and there's kind of this whole lack of transparency there. That's how they can get shielded through this. And there's, but, really what I'm kind of most interested in is a lack of transparency in terms of, systemic risk, right? So when you have blockchain where you actually it's open source, you can look at the code, at least for the most part, you can actually understand what kind of smart contract you're dealing with, and you can see the parameters that they have set. And if these are set correctly, then you avoid the ability to have systemic risk in the first place, right? So, that's the way it should be, and that's the way that you can actually build a very interesting, super ultra efficient economy on chain. When it comes to privacy coins, right? And my thoughts on those, I think they're important. I think in a world where they're pushing this narrative of digitalization of money, right? That is actually very, very risky. If you do it in a centralized manner, it's very dystopian. Where a central entity can actually control how you spend your funds. They can pry into everyday use. So that is a major issue. I would say, because of that, privacy coins and such they're important. They're important for the preservation of liberty. Now, of course, you mentioned Mimblewimble, and some of these technologies are experimental, and sometimes the implementation doesn't match the actual theory, or there's some missing detail, and as a consequence, the project can have issues because this technology is difficult, right? Nonetheless, I think I'm not entirely sure. Look, if you decentralize this enough, I'm not entirely sure that you can stop it. Which is a powerful force, and it's a double-edged sword, though, right? Because now you have also, the group that hacked the Ronin blockchain, the Axie Infinity blockchain. That was a cryptographic. They somehow hacked the keys just over the validating nodes. They're able to withdraw like $600 million. Now, this is not a failure of the blockchain itself. It was a leakage of the keys. So it was more of a social engineering attack somehow, where the keys got leaked. And to be honest, the way that they handled the keys was a little bit too irresponsible considering the value that they were holding. They should have decentralized that further. Nonetheless, what's happening is apparently that's maybe a North Korean hacker group, very elite group, who is now cashing that $600 million out of Tornado Cash, a privacy protocol on Ethereum. So this is kind of it's one of those things where it's a double-edged sword on privacy. But by and large, I think net is definitely a positive.
How is an enterprise multi-sig wallet, that provides secure storage and management services for crypto assets a real game changer for institutions?
I think it's a must. I think it's a great question. I look at it from almost a managed or unmanaged, right? So if I'm an end user, I have, anybody can create a wallet and manage their own funds, right? And there's the managed, right? Multi-sig. And kind of look at it from that perspective. With a multi-sig wallet, even now they're calling them smart wallets or multi-sig. There's many things you can do that are almost a must. Like, let me give you an example. Vesto's wallets are non-custodial, which means that one of the private keys is always controlled by the user, but Vesto has another private key, and you need two keys to do a transaction. So once the reason we did that, and this came up with a use case, everything we do, all the assets coming in, the user, it's all KYC, all AML. If somehow one of our users gets flagged and says for AML or it's a bad actor, what do? There's nothing you can do on an unmanaged wallet. With a managed wallet or multi-sig, Vesto doesn't even sign the transactions, which means you can freeze those funds. Now, under the law, we can't take the funds, but at least we can lock them up, right? With also managed funds, if you look at some of these bigger institutions, they're moving a lot of assets around. Now, with a multi-sig, and another thing that Vesto is doing with our signing policy, you could have limits to say, okay, if it's under, $1,000, it takes one signature. One individual. Let's say it's over $10 million in assets, you need two signatures, or even if it's greater, you need three. So all these type of policies you can't do with an unmanaged, or I would say a non-multi-sig wallet. Also, one of the benefits too is AML. So for instance, if a user wants to go send or actually transfer tokens on an unmanaged, there's nothing you can do. It's done. They can do it. They have the private key. They can run it. With the multi-sig, you could actually check the address and do a KYT and say, with some of the providers out there to see if it's been blacklisted before the even money gets transferred out of the wallet. So I think as the regulation now is getting more and more involved in crypto, I think multi-sig is a must.
It seems like a multi-sig is just a building block right now, because there seem to be other challenges in that KYC AML. Like, what are some of them, and how do we make that a smoother process?
Yeah, that's a really good question. That's a really good question. I think one of the ways that we've tried for our first version is to really lock down, because we're going after certain use cases and some of the financial institutions. The AML, we're actually simplifying. Where the first version that we're doing is we can only transfer between wallets of Vesto. So you can't transfer outside of our ecosystem, number one. I think that version 2, we're definitely going to open it up. But I think that starting to put some of these controls, which you can do in smart contracts on the blockchain, I think is going to help give comfort, I would say, to the market and also the regulators.